walk us through some of these numbers here? Because it seems like at this point, exports, we continue to see close to double-digit growth. Imports, though, surging. What do you make of all this?
Well, China's imports are surprisingly upside for quite a number of months now. That's mainly because China is first in, first out of COVID-19, so that its production is revived after the virus is under control, while the rest of the world is still locked down or in lockdown or being disrupted. So when other countries buy from China, notably those pandemic-related goods, Chinese exports perform well. So I think the situation for Chinese exports, which will continue to perform, will remain as long as China's infection remains under control, while the rest of the world remains disrupted. So China's export growth will fade later on, eventually when world production catches up. So on the import side, I think it shows that the Chinese economy is coming back.
Some were questioning, though, whether this surge was just a one-off, because there could be a lot of Chinese tech companies that were just trying to bring more imports in ahead of that U.S. ban on Huawei on electronic components. You're saying there's more to that?
Well, there's certainly more to that, because, as I said, this timing issue is one key factor. The other factor is that China has also developed many non-U.S. export markets in recent years, especially those developing countries along the Belt and Road Initiative route. So that helps Chinese exports too. I don't doubt that there will be some exaggeration in the short term when the Chinese firm trying to export or import ahead of the U.S. bans, but that, I think, it's only going to be one small factor among the big factors, the macro factors.
Chi Lo, one of the questions being raised right now is the outlook for Chinese exports to Europe, given the rising virus cases there. That could impact demand. How much clarity do we have? How will it play out from here?
Well, if you look at the export trends of Chinese manufacturers in the past half a year or ever since COVID-19 started, Chinese exports to Europe as well as to the U.S. and also to ASEAN, these three key Chinese export destinations, they've grown quite remarkably. So I think this situation will remain in the short term, as I mentioned earlier, as long as the rest of the world is being disrupted by COVID-19, while China has kept the virus under control. That will continue to help Chinese exports. But eventually, when the world recovers, I think the Chinese export numbers will come down.
And how sustainable are import numbers, given that domestic demand at home remains uneven and it's still below pre-pandemic levels?
Well, if you look at Chinese demand from an import perspective, the economic recovery in China has been driven mostly by the production side of the economy, which means that China has to buy raw materials, capital goods, and commodity, and so on and so forth. And the demand side is only coming back very slowly. So short term, all these imports are basically going to cater for China's production side. And then going forward, when demand catches up, there will be imports of other consumer-related kind of goods, which also will push import growth down the road.
Chi Lo, what does this mean when it comes to policy now for the PBOC, for the government? Does it seem like they're on course for more of a normalization of policy? Could we actually see, as some are forecasting, potentially rate hikes in 2021?
The next policy moves of the Chinese authorities are data-dependent, which means that if the economy sticks with a steady recovery, I don't think there will be any more easing. So I believe China's easing cycle has bottomed out. But on the other hand, if the economy doesn't show stabilization and continue to show downside risk, we could expect another round of easing going forward. Now, as far as tightening is concerned, I don't think it's a high odds outcome at all, because inflation is not an issue in China. This year, next year, we are looking at around 2% or a little bit more than 2% inflation there. That's basically because this inflationary pressures in China dominates the whole system due to deleveraging, the subsiding effect of flooding and swine flu on prices and so on. So I don't think inflation will be an issue that will trigger any policy tightening. And on the back of weak global backdrop and also a weak global domestic growth momentum, the odds for any policy tightening within the next 12 months to 18 months is very, very low.